Evening guys, so for this video I just wanted to go over PD arrays more and how to draw them and emphasize more on the drawings of them. From a blank chart monthly down to the daily, because since that's what I use, but you can draw PD arrays on any time frame down to 1 minute actually. But I'll just show you in depth how you draw them so that you guys can apply them correctly. Now you can use PD arrays on any strategy as support and resistance zones too, rather than actual support and resistance theory, because it's baseless, it doesn't make sense, as opposed to PD arrays where you know that you choose them specifically by lows or highs. So what's resting below lows or highs, stop losses. What's resting below here, what's resting below here. Where would you put your stop loss? Below a low or above a high? Or would you just put it anywhere? It's obvious, you put it above a high or below a low. So that's also our reasoning, because we know that there's money below these areas, right? So these areas are not just lows, or it's also a place where the market took stop losses from, or where the market knows there's actually money in those like spaces. Like if there's a low at 92.933, and I know for a fact that there's money below 9233, because of the simple fact that the stop loss is residing here. And what the market tends to do is to actually retrace to collect these stop losses and then leaves to rebalance its orders, right? So how do you draw these things, right? So these are ICT concepts. If you want to learn in depth, so what are they and the actual science and mechanism behind it, he'll explain it better. I actually learned from him. These are his concepts, not mine, so he'll understand it better. So again, I urge you to go watch his videos. But anyway, yeah, so we have discount and we have premium arrays. Here we'll start with discounts. So the last down candle after a low, right? The last red candle, meaning that's a down candle, a red candle. The last red candle at a low, or after a low has formed. So we have a benefit of hindsight. So after every low has formed, what do? We get to the chart at the last red candle. We do this. We mark its high, low, open, close. If it's too close together, then you just mark open and close. That's what I do, right? I don't necessarily mark them all. And there's also equilibrium, so you can only have 5 points to mark, but I don't mark them all. I just mark my open and close, because that's what I choose to focus on. So you can also choose to focus on every single array, or I don't know, but it depends on what works for you best. But I'm just showing you how I do it in a simplified way. So this is what I do first when I want to draw my PD arrays. This also helps me with the direction where the market is going. You know where price is going to reach to. This helps me with that too, where market is going and basically where it's possibly going to reach to, right? So that I know where to exit. When I enter, I already know where I'm exiting, right? Okay, now premium arrays. Premium arrays will be red. Where do you draw them? After the last green candle after a high, the last green candle after a high, like this. Open, close, high, low. This candle right here is the last green candle after this high, right? This is, you have to always have the benefit of hindsight with this thing. So when ICT draws this thing and shows these concepts, it's not because it's easy to see just because it's already happened. No, we always have that advantage. Everyone, me and you both have that advantage. So just like I'm doing now, all these things are points where price has reached, or it's going to reach to, and it's going to use these price levels to move, right, to determine where it's going next, and where it's going to trap orders, and so forth. So, but this is basically what I'm showing you, is just PD arrays, how to draw PD arrays, how to include this into your strategy, So this is what you do. And then again on the weekly, if you see that where you most probably would have put a PD array, there's already monthly arrays, I choose to leave it. I don't care for redundancy and put the same thing over and over. So here in every array, that I would have put a weekly array in, there's already one, except for maybe here, this point that I want to highlight, because as you zooming in, you want to highlight things, and then this, because I trade at a weekly overview, so I want to have arrays that are close by, especially for like the current analysis. So I will have this, I want to mark this out, and you will see why it's important too. This is, you want to mark everything out, right? This specific last candle here, red candle, you want to mark this out. Why didn't I mark it open? Because it's already been penetrated, but this hasn't yet been penetrated and the market is trading here, so it could use this to what? People go up. This is why I still have it, but again, you have to look close. You have to be very, very vigilant and pay attention to detail with this, because look at it here. What is this? This is another discount, your premium array. This is another premium here. Right, so let's see which one it's trading away from currently. That's what's going to determine our bias. Firstly, now we have a bias now. Meaning, what is a bias? If we're taking a trade this week, we know we're taking it in line with sells or buys. So let's see what's the last, what premium or discount rate price is trading away from. If we look closely, we'll see that price was traded away from this discount into a premium, rejected, retraced back into this discount, came into this premium, and then now it's currently reacting away from it. So by tomorrow, Wednesday, New York session, if it's still here, how would I frame my trade? I'd mark out this premium array 2 on the daily. So now this is how I'd frame my trade. So I'd expect something like this, goes down, comes back up. This is a sell, from how I'd frame a sell, into this area and down into a discount array. Where do I exit? Right here, into this discount array again, right? Because stops will be cleared, but obviously then you just keep on doing that week in, week out, and then how would I frame a bullish setup? How would I frame it? Firstly, I'd want price to reach down here at this daily discount rate by tomorrow, New York session, Wednesday. Alright, but it doesn't have to be Wednesday. Price and timing of day is what matters most, not time of the week, because I know Steve Morrow puts a lot of emphasis on Wednesday, but that's not true. Like, just read price and time of day is what's important, right? Because times of day, you find that a lot of manipulation will happen during London and then moves in the actual direction during NY, but that's just what happens sometimes we'll move NY, but just make sure you have time of day correctly, like London open and NY open, so just know when to exactly trade though, and where, after you've got the direction. So you just mark out these things, and then you see where price is trading away from, and then try to enter a trade as it goes along by using the various other things that ICT teaches, which you should go and learn. But I just wanted to cover how you would draw PD arrays from monthly to daily, and maybe how I would use them now to look at the market using a lot of other confluences like Power of 3, 30-year bonds. I also have marked out my PD arrays on those. So anyway, for now, this is it, guys. Cheers, till next time.